What money transfer outside banking system signals? Transferring money to another person will soon be possible without depending directly on a bank. Anyone will be able to send money online or withdraw cash using a mobile wallet or non-bank entity through real-time gross settlement and the National Electronic Fund Transfer, the centralized payment system of the Reserve Bank of India. In short, non-banks are expanding the foothold in the traditional area of banking. What has the RBI done to facilitate this? The RBI last week proposed to enable in a phased manner payment system operators like mobile wallets regulated by the central bank to take direct measures in RTGS and NEFT. This is expected to minimize settlement risk in the financial system and enhance the reach of digital financial services to all user segments. These entities will, however, not be eligible for any liquidity facility from RBI to facilitate settlement of their transaction in these CPS. The facility details of which are yet to be unveiled will be subject to an overall limit of rupees 2 lakh for non-banks. Experts say that just as use of UPI increased over the last 4 to 5 years since it was open to the third-party aggregators, opening the payment system to non-banks would increase digital payments and transactions significantly. In a sense, it will prepare a digital trail of all individuals doing digital transactions on channels outside the banking system, which could help the overall financial system. Until now, an individual's credit profile was available primarily with the banks. With this, the opening up one's credit profile can also be tracked while taking a loan from a financial technology fintech company, investing through it or spending through it. A credit score will be built on the basis of your financial touchdowns. While bank conducts credit assessment on the basis of your assets, loan payments, repayments, credit card payments, etc., fintech companies are not just looking at your asset payments for credit decisioning. Youngsters using fintech platforms have no or less financial assets, and yet they are borrowing and spending. This will allow them to have a digital trial for and build a credit profile. So one must be careful in the way he or she borrows and repays even outside normal banking channels, said Srinath Sridharan, Governing Council member of Fintech Association for Consumer Empowerment, who can now undertake online transfers. The RBI will now allow non-bank entities, prepaid payment instrument issuers, card networks, white label ATM operators, trade receivables discounting system platform to become members of CPS. Mobile wallets like Google Pay, MobiKwik, PayU, Ola Money, PhonePe and Amazon Pay can provide NEFT and RTGS facility to their cash withdrawal. Another monopoly of banks too is set to go. The RBI has now proposed to allow the facility of cash withdrawal subject to a limit to non-bank entities. Full KYC PPIs of non-bank issuers. Currently, cash withdrawal is allowed only for full KYC PPIs issued by banks, and this facility is available through ATMs and POS terminals. Holders of such PPIs, given the comfort that they can withdraw cash, are less incentivized to carry cash and consequently more likely to perform digital transactions. With the RBI now allowing non-bank to withdraw cash subject to the limit of rupees 2 lakh on banks is likely to come down. The fine print on cash withdrawal is yet to be announced. What does the hike in cash limit mean? The RBI has now decided to increase the limit of outstanding balance in PPIs of non-banks from the current level of rupees 1 lakh to rupees 2 lakh. This will facilitate and incentivize online transfers and cash withdrawal from non-banks and enable them to go for full KYC compliance and interoperability. Migration towards full KYC PPIs and therefore interoperability has not been significant. The RBI says interoperability of the PPI wallet will expand the market size and will be beneficial to end consumers. The RBI has also relaxed the norms for the membership of central payment system, which was earlier available to only banks and few other institutions. This will open new opportunities for PPI issuers as they will be able to provide RTGS and NEFT services to the wallet users. Overall, this will take financial inclusion deeper in the country. Are non-banks a threat to banks? The opening of fund transfer and cash withdrawal through non-banks is certainly a sign of changing banking horizon. Traditional brick and mortar banking is slowly disappearing with non-bank entering the space. The RBI says India is on the way to becoming Asia's top fintech hub with 87% fintech adoption rate as against the global average of 64%. The fintech market in India was valued at Rs 1.9 lakh crore in 2019 and is expected to reach 6.2 lakh crore by 2025 across diversified fields such as digital payments, digital lending, peer-to-peer lending, crowdfunding, blockchain technology, distributed ledgers technology, big data, regtech and subtech. In a world where fintech companies are leading in terms of the volume of digital transactions and playing a more active role in the banking and finance industry, it is important that commercial banks adopt to the technological changes and work in tandem with these entities so that in future they are part of the ecosystem rather than competing with fintech companies for business, RBI Governor Shaktikant Das said last month. Thank you.